That's why the richest people in America own real estate. And if you follow this track, path, whatever you want to call it, guess what? You'll be one of those rich people too. I'll tell you what I'm gonna do, Oleg. I'm gonna fucking riff. 7 minutes, I'm just gonna riff off my mother. And what I'm gonna do is I'm gonna give you some gold. Gold! Gold, Jerry, it's gold! Pull it back a little. All right, good, ready? Yep. 5, 4, 3, 2, 1. Yo, what's up? It's Frank, and what I'm gonna talk to you about today is rentals. Rental houses. Now, you can have rental apartments, you can have rental duplexes, you can have rental tricycles, whatever you want, but what I want to talk to you about is rental houses. So people often ask me, okay, what should I do? I got some money and I want to do something with it. I'm going to buy rentals. So the first thing I'm going to tell you to do is, like everything else, don't just listen to the gurus or do this. Think, what's best for you? During the last downturn, I had people call me up and they're saying, okay, I got $600,000 saved. I think I'm going to buy some rentals. Like, okay, that sounds fine, but do you have a job? Well, no, I got fired. Okay, so you have a pile of money, 500-600 grand, and you have no job. And if you're gonna go out and buy 2 or 3 rentals with no job, you're gonna pay more for a mortgage. And not only are you gonna pay more for a mortgage, you're only gonna get a slight return, maybe a couple $1,000 a month for these rentals. So you might end up, if you buy 2 houses at 600 grand, you might get $3,000-4,000 a month. Can you live on that? Most likely not. So what I would rather do if I had no job is I would wait until I had a job and I kept that pot of gold and I lived off of that pot of gold. That's just me, but that's what I would do to start. If you're looking for a residual, a small amount of money, a return on investment, rentals are great. So I would be employed, number 1. Number 2, if you are employed and you have a little bit of extra money, the best thing you can do for a rental is use what's called the golden tickets. Fannie Mae and Freddie Mac are conventional mortgage brokers, holders, whatever. They provide mortgages. They have very, very strict underwriting guidelines because they're not owned by the government. The government is pretty close to owning them, and they control them with a lot of legislation. Okay? So the point is there's a lot of legislation. It's not like getting a hard money loan. You got to go through a government entity to get a mortgage. But the government entities that provide these mortgages are the cheapest and best mortgages. So because I'm a real estate professional and I don't get a W-2, I run a business like this, I get draws. The point is I don't have what you have. You have an advantage over me. You get a W-2 if you have a job. So if you have a W-2, you can qualify for a mortgage. This is a big thing. You can get a 30-year fixed loan on a rental. What that means is you pay less in interest than I do for a rental home. It gives you an advantage. You can pay more than I can for a house because you get lower terms. That's a big deal. You need to capitalize on that. Now, these laws change. Sometimes it's 6. Right now it's 10. You can get up to 10 conventional mortgages if you have a normal job and you get a W-2. That's a big deal. Are you married? Well, you and your wife can get up to 10 each, so that's 20. That's a big deal. So if you live in a house and then you can buy up to 19 houses with you and your wife with Freddie Fannie money and get incredible rentals. That's a big deal. So you're gonna have lower interest payments, you're gonna have some residual income, but the other thing you're gonna get if you buy rentals is you get depreciation. Now, if you're gonna start owning a couple of rentals, what I would recommend, and again, everything I say, go check with your tax guy or lady and your attorney just to make sure in your state everything is the same, but these are general guidelines. The first thing you want to do if you own 5, 10, 19 rentals or more is you want to start an LLC. Now, the reason you want to start an LLC is because an LLC is a business. Businesses get expenses. You're allowed to put expenses on a business. What are some expenses? A car, an office, gas, a cell phone. I'm not telling you to do anything illegal. What I'm telling you is you put expenses that you probably already have into this business. Are you using your cell phone? Are you driving your car to go check on your rentals? Well, those are allocated expenses that can go into an LLC. So when people think I'm going to buy property, what they think of is I own property. The first thing you get is a business, and that business gets expenses. My wife is brilliant. She's valedictorian of her high school. She is a professor. She speaks multiple languages. When I was trying to explain to her the difference between a write-off and an expense, it took me a while to explain it. Here's the difference. An expense is if you make $1,000 and you spend $500 a year on your cell phone, you only made $500. That is an expense. A deduction, let's say you have a $500 deduction. Well, you only get to deduct that at a percentage, whatever your tax bracket is. So on that $500, you only get 30%. That's only $150. Well, right there, you just made $350 on expensing your cell phone bill. And I don't know about you, but my cell phone bill is a hell of a lot more expensive than $1,000 a year. So that is an example. You can own the real estate. You can use these incredible mortgages. Then you can set up an LLC. Now that LLC, your attorney is going to guide you and listen to them on how to set up the LLC. I set it up where I have a large LLC that owns most of this stuff. I put a bunch of insurance on it, of course, to make sure I'm protected. And then I get to run my expenses through it. So, house, income, expense. It gets better. You can depreciate a house. What is depreciation, Frank? That's a good question. I'm so glad you asked. Depreciation is something that the US government does, and they take a house. Let's just say it's a brand new house. And they say that house has a usable life of, let's call it 27 and a half years. Tax law changes, asset classes change. Right now it's roughly 27 and a half years. So if you have a house that's worth 350 grand and the land is worth 75,000, well, that leaves you with roughly 275 grand. If you divide 275 by 27 and a half, what you get is $10,000 per year in deduction. So you can make $10,000 before you have to pay a penny in tax because of depreciation. Okay, but what about when I sell this house? Don't I have to recapture my depreciation? You do. That's absolutely correct. But unless they change the laws that are currently surrounding capital gains, what happens is this. If you sell your house and you've owned it for more than at least 1 year, and it doesn't have to technically be rented, you just have to try and rent it, or it needs to sort of be a rental. This gets foggy, but the US government is typically foggy. So what it is if you intend to rent the property, you can claim it at sale as a capital gain. So instead of being taxed at ordinary income, it gets taxed at less than ordinary income. So does that make sense? That's a big deal. So let's just say you collect money every year in rent. You get to depreciate. You get to expense. And then when it's time to physically sell the house, you probably had appreciation. On average, houses go up between 3 and 4% annually, and that starts to stack. Then when you sell, your profit is taxed at a lower rate, like way lower than what you pay on your earnings. Isn't that nuts? So why do you own? Lots of good reasons. It's not great if you only have a certain amount of money and you don't have any money coming in. But if you have patient money, people will say, I can make 6, 7% of my money. Yeah, but are you taking into account everything, like the expenses and the depreciation? Add all that together. That's why the richest people in America own real estate. And if you follow this track, path, whatever you want to call it, guess what? You'll be one of those rich people too. So I hope this video helped. You understand it. If you have questions, let me know. Good luck. And let me put it to you this way. Go buy some freaking real estate. I riffed, I riffed. All I did, Oleg, was riff. No prep, no notes, let's go. You know why? Because I know my as Adam Sandler said, not too shabby.